let's get in Nikhil Bhandari on the conversation. He's co-head of Asia Pacific Natural Resources and Clean Energy at Goldman Sachs Research. He joins in on the show. Nikhil, so good having you. Thank you so much for taking the time out and being with us today.
Thank you for having me. And looking forward to the conversation.
Yeah, us too. So, Nikhil, the most, how do I say, most common belief is that the energy transition story in India is alive, kicking, present, continuous, and likely to last till the end of this decade for sure, maybe longer too. When you think about it relative to what's happening in the rest of the world as well, is that story very promising in India?
Yes, no, I think that's a great question. Look, it's been a beautiful journey that India has seen for the evolution of the renewable industry. If you look at the last 8 to 9 years, nearly 80% of the new power capacity addition has been renewables and hydro. Or put it other way, roughly 45% of our power capacity mix now is renewables and hydro. China was there about a couple of years ago. So again, this has been a very strong growth. The key debate from here is, can India continue at this trajectory of the new power capacity addition to be as renewable heavy, given this is a variable power in nature? Again, there are two observations that we have pointed out in our report in that context. One is, after hitting a certain level, like in China, we have seen in the last 2 years, there has been concerns around grid's ability to intake that much renewable power during the day. During the day, as the sun is shining, we are creating a lot of renewable power. And at that point, the base load, which is coal utilization rate, has to be dropped on the utilization rate. But the coal plants are not designed to be up and down so much that we can bring them down in the morning and we can bring them back in the evening. We can do it to a certain extent, but we can't do after a certain limit. So again, we have to watch carefully whether the grid intake is there for absorption of more and more renewables from here. And the second point is, as we point out, power demand growth is also going to be accelerating at a faster pace. So the reliability of power around the clock will be important. So the role of batteries, the role of thermal coming back, all of that will also be important in that equation.
Well, Nikhil, that's okay, I admit I didn't think of it this way, right? That if you do too much of renewable, then are we putting the efficiency of the coal power plants at risk now? So when you look at the India situation, and maybe India has not done what China has done in the last quarter or even otherwise, right? Has India been on a measured growth path because of its own bottlenecks as well? And is that inadvertently a good thing to happen to India? Part one of my question is that. But part two is the targets that have been set by the government for 2030. We constantly hear from companies that those are good North Stars. We may not hit them in 2030. Is that also a good thing? Because that would mean that both thermal as well as renewable, at the pace at which it's getting added, could coexist and move in a linear fashion.
Yeah, sure, absolutely. So to answer the first question about the coal technical limit, I think it is somewhat measured. We can see government is taking steps to put incremental capex to bring the theoretical limit, low limit of the PLF, plant load factor of the thermal plants, to come down. Again, some of the plants are old. It takes time. It takes more capex to bring it down. So we will see how fast we move towards bringing that limit down. Look, during the day today, we are already seeing coal utilization rates are being cut from 80% to 60%. The theoretical limits for certain plants are between 50 to 60 or 60 to 70%. Unless we bring that limit down materially, it becomes hard to absorb that much renewable without curtailment issues of renewable. Curtailment meaning we are not taking all the renewable power available because we can't bring the coal limit down beyond a certain limit. So government is realizing that, and they are already focusing on that. The second factor which is important here is that all the incremental solar or renewable addition have to be more and more smarter. Smarter meaning we need to back it up with alternate storage. Coal can act as one way of storage where you cut the utilization in the morning, but bring it back in the evening when you need the storage for solar backup power. But the other option is batteries. So if we size up the batteries needed against this power demand growth, it is going to be a large number. Over 500 gigawatt hours is how we have quantified it by FY32, of which over 400 is coming from battery. The rest can come from the pumped hydro storage. In terms of your another question, can they coexist? That's our conclusion. I think they will be coexisting with a 10-year view. While there is a risk of the evening power shortage, without if you're not installing enough batteries. So battery is important to resolve the evening non-solar hour power deficit situation, which is emerging in our view in the next 3 to 5 years. But I think beyond 3 to 5 years, we are also seeing energy deficit opening up, meaning a full day deficit also opening up against a 7% plus power demand CAGR. And for that, we need to look at other reliable round-the-clock options too. Why we say thermal and why not gas and nuclear? Gas is still the expensive source of power in the cost curve today, and it's again not a self-sufficient option. Similarly, nuclear takes much longer. The lead time is 10-year plus to set up the nuclear plants. So naturally, when you think about self-sufficiency, affordable power, and a reliable power, thermal may need to still coexist alongside renewable and storage.
That's an interesting point. And good morning, this is Hiral on this side. Now, taking into consideration what you mentioned about the growing power demand, the focus that we are putting on with regards to renewables as well, which pockets would you favor? Would it be BESS? We know about the battery energy storage system. Would it be generation, transmission, or equipment? Because each subsegment within that power segment may be undebatable in terms of growth, but you will have to see relative faster growth versus rest of the markets. So where would your bets be accordingly?
Yeah, look, I think it depends again on investors' horizon period. But again, the more immediate bottleneck to resolve is the batteries. The reason I say that is because we are expecting the non-solar hour peak power deficit to start widening from next year again as the cyclical concerns on the power demand normalizes. So again, batteries is the more immediate bottleneck. We don't have a lot of battery cell manufacturing. Within the battery as well, it's not the best system that we're talking about is the main bottleneck. I think the main bottleneck is the battery cells. That is a highly consolidated industry globally. Entry barriers are high. And that is where the self-sufficiency will be a bit of challenge. But those companies who are able to manufacture cells locally will be at an advantage or will be able to command a better return on their investment. So that's one. The second, as I said, revival of thermal is an important theme here, and those who will be helping build, generate that power, move around the coal, produce the coal, all of that will be important in that equation. So that's again another interesting hunting ground from a medium-term perspective. And another area which I think is important is if power deficit becomes again top of mind, and we look at our solutions available, another less talked about solution is just reducing the transmission and distribution losses. India's T&D losses are still high at about 18%. The world average is below 10%. One way to contain the deficit is electrify the last mile, the distribution network. I think there is a realization on the HVDC bottleneck, high voltage, long distance lines, because we have a lot of renewable power produced in Rajasthan and Gujarat, but the demand will need to be across the country. So we need those high distance lines. That has been already, we have seen awarding of several HVDC lines, and that will continue to be top of mind. And those areas of equities who are in that area have done well. But I think distribution electrification, the medium voltage, the low voltage, the smart metering, all of that is also very important to solve. So again, to answer your question, it's actually a hunting ground. Depending upon your horizon period, battery is more immediate, thermal is more medium term. And resolving the distribution electrification is again a medium term an important area for investors to focus on.
Interesting point that takes me to is then how are you looking at India's import dependence with regards to key raw materials that may be required to scale up the subsegments as well? Because then you're talking about the direct impact in terms of the T&D segment where the profitability is somewhere hit. So how does that entire picture pan out, taking into consideration the margin profiles as well?
Yeah, look, I think India's transformation in the power sector will come with rising import dependency in certain areas, at least over the next decade. Coal production is expected to grow around 5% CAGR for the next few years. So that's comforting. But given the rising, surging power demand, On an absolute basis, coal imports will need to more than double, in our view, by FY35. We also think gas LNG imports will be doubling in the next 5 years for India. Battery cell is a difficult area to localize. It takes time, 10 to 15 years to gain the mass production skill set, is what we have learned looking at the companies globally in the battery space. And polysilicon within solar is an important area that India needs to localize, because we have done a great job, on module solar, where we have an overcapacity now. Solar cells will also be self-sufficient in our view in 1 to 2 years' time, but polysilicon is not still produced in India. So again, there are some areas where the import dependency will still be rising. Polysilicon, battery cells, coal, not on a percentage of demand basis, import to demand ratio, but at least on an absolute basis, and gas import. So these dependencies will be rising, which is why I said resolving some other low-hanging fruits, for example, reducing the T&D losses, is something that can contain the power deficit situation without increasing the dependency on the rest of the world.
So Nikhil, very lastly, what are the investment themes that you're looking at, and what would your top picks be?
Yeah, look, so again, I can't talk specifically on the stocks here, unfortunately, due to our compliance, but I can help frame the themes here. So as we think about the broader renewable space, we don't believe just producing solar module or solar cell or a solar generation alone is a differentiated business model anymore. It is getting very competitive in these areas as competition has caught up. I believe companies who can do end-to-end polysilicon to module to power, end-to-end integrated solution providers will be a more sustained business model here. In particular, those who can resolve polysilicon and battery cells. So I think that's one theme to focus on. Second, as I said, from just a pure generation aspect perspective, thermal will be important. Renewable generation is starting to have a bit of ceiling here, given the dynamic of the coal technical constraints and other constraints when you become so big in the power mix, when you're variable power in nature. So again, thermal power will still be important. So that's the second theme where our stock picking is focused on. And third, within the whole transmission aspect, our grid was relatively rebuilt in the last decade, so it's been relatively new. I think the bottlenecks are HVDC line, high voltage distribution line. That's already playing out from a stocks perspective. That continues to remain the theme, because we need more high voltage distribution lines to be ordered. But as I said, one area that has not got as much attention in terms of capital deployment is the distribution electrification. And I think that is an area where stocks position either to supply equipments there, or those who are helping on the ground to reduce the T&D losses will be an important area for stock picking as well.
Nikhil, appreciate you joining in today and giving us your thoughts and distilling this conversation for us. Thank you so much. Looking forward to talk more often.